Credit histories and scores are taken into account by lenders across most lending categories. Your credit score will have an impact on not only whether you can obtain mortgage financing, but also on the final interest rate and fees you will have to pay if your mortgage loan is ultimately approved. Hello everyone, this is another video from Mortgage Broker Store. In this video we will explain how your credit score is calculated. You will also learn what your credit score should be to buy a house. Finally, we will explain how to maintain good credit throughout the mortgage application process. To begin with, let's answer an important question: how your credit score is calculated. There are two major credit reporting agencies in Canada, Equifax and TransUnion. Their primary role is to assign a credit score to an individual based on several defined criteria. From these criteria, your credit score is determined and allocated. Both reporting agencies have not provided mortgage professionals with the exact way in which they come up with your ultimate credit score. However, it is without a doubt that there are specific criteria that they are analyzing. The chosen criteria form the basis of the calculations that they ultimately make. Let's review an outline of the elements that are assessed when determining an individual's overall credit score. The first one is your payment history, which accounts for approximately 35% of your credit score. It includes account payment details, the presence of collection items, the degree of delinquency, and the number of past due payments as well as the dates of any recent collection actions. The next criterion is utilization, which makes up approximately 30% of the total credit score. Utilization is made up of a list of all accounts, what specific accounts the borrower has opened as well as the utilization of any open revolving line of credit. The third factor is the length of credit history, which accounts for about 15% of the overall credit score. It will include the time since the account was opened and the specific date it was opened. Another factor that influences the credit score is the type of credit products. This makes up approximately 10% of the score. It includes the number and types of accounts a borrower has opened as well as trade-related data. The last part of the credit scoring process is inquiries, which contribute about 10% to the overall score. This represents the type and volume of recent inquiries to either reporting agency. Now that you know what factors affect your credit score, let's see what your credit score should be to buy a house. As you might know, the amount of a mortgage loan will be largely determined by a lender's overall assessment of how reliable a borrower you are. They obtain this information from your credit report. Your credit score will also be pivotal in reaping the benefits of extremely low borrowing costs. The higher your credit score, the lower the interest on your loan. Having said this, the question arises as to what credit score is needed to buy a house. Generally, a bank will be demanding a credit score of higher than 600 with preference given to 650 and above. Other lenders will have less stringent credit criteria. Trust companies and credit unions will accept credit scores of 550. The third group of lenders in Ontario that are able to arrange home mortgage loans despite low credit scores and damaged credit are private lenders, which are also called C-lenders. Let's move on to the last question: how to maintain good credit throughout the mortgage application process. To increase your chances of securing mortgage financing with the best possible rates, there are things you should avoid doing while you are in the process of applying for a mortgage loan. The first step is to not take out any other loans or liabilities while you are applying for a mortgage loan. Second, try not to make any unnecessary credit inquiries after you obtained your credit report and reviewed it carefully. The third is to be mindful of paying all your bills on time and in full, leading up to a mortgage application, during and after being approved. Finally, remember to pay off any high-interest loans such as credit cards. Now you know what a good credit score in Canada is for a mortgage, and how your credit score is calculated. You can read more about this topic on our website by clicking on the first link in the video description. If you need help with mortgage financing or selling your home to a cash home buyer, the Mortgage Broker Store team can help. Just click on the second link in the description to book a call with our experts. Thanks for watching. Don't forget to like this video and please subscribe to our YouTube channel.